I lost 6.39% on this stock. So let me explain why did I buy this stock? Where did I buy this stock? And how did I lose 6.39% here? So the basics first. The yellow line is my buy point. The red line is my stop loss. On 5th of July, on this green candle, I bought the stock. So let us look at the base before this breakout. Okay. So the breakout starts from, so the base starts from here. So this is 0.1. After this, if I start counting the candles, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So I am looking for minimum 10 candles in the base, which is 2 weeks of consolidation. So I have it here. Moreover, I am looking for minimum 4 points in the base or 2 contractions, which I will show you here. So if I take this tool, 1, 2, 3, and 4. So there are 2 contractions in the base, 4 points in the base, 10 candles in the base, which means 2 weeks of consolidation, and the moving averages. In this case, since it's a new stock, there is no 150-day and 200-day moving average. This is Bajel projects. So the 50-day is below the 50 days below the price. So that's fair enough with me. Plus, this stock has a relative strength, which I check in my market Smith filters. So this stock qualifies under my criteria. So I put the yellow line at 0.3, which is the high of this candle, and that becomes my buy point. So on this day, I put prior to this day, I put a order at the yellow line, or buy order, automatic buy order, and I put 2.5% of my portfolio in this stock. As you can see, the order gets triggered, the stock goes up on very high volume, above average volume, and it closes at above average volume, and it closes above my buy point. So straight away, I am making money in this stock. However, the next day it starts to fall. Okay, now I am wondering, where is my mental stop loss? The red line is my stop loss, which is 8% below the yellow line. So my mental stop loss should be point number 4. So 0.1, 0.2, 0.3, 0.4. So the argument here is, if the stock closes below point number 4, I will manually sell the stock. I will not allow the stock to come and hit my 8% stop loss. This is a strategy to limit losses. 8% stop loss is just there for emergency purpose. If the market gives me a clue that it is probably going to hit the 8% stop loss, I can get out early from the stock by limiting my loss. So point number 4 is my mental stop loss. So if I draw a line here, see point number 4, I draw a line here, see 1, 2, 3, 4. All these 4 candles don't close below the blue line. So I stay in the stock. But on this day, I was expecting the price to bounce from here, because as you can see, this was a high volume bounce. See, it's above average volume. High volume bounce of that point number 4, which was very encouraging. So I thought the stock will pull back from here. But that did not happen. The next day, it broke below the blue line. And just 2 minutes prior to the close of the market, I exited the stock. Okay. So if we see here, that's a roughly 6.41, 6.40% loss. So instead of 8%, I am booking like 6.4%. So I am saving myself that 1.6% of loss. See, this is eating into my unrealized gain. It could eat into my realized gains as well if I don't book my unrealized gains. Let me repeat that statement. It's a very important statement. This stock is eating into my unrealized gain, and it could also potentially start eating my realized gains if I don't book my unrealized gains. Okay, I hope you understood that statement. So that is why it is important to limit losses, and this blue line, which is the mental stop loss, sometimes comes in very handy. Now, this blue line need not always be below the yellow line. Sometimes the stock starts to go up. Let's say it goes up 30, 40%, which happened in some of the stocks that I bought. Like for example, in HPL, in just 3 to 5 days, the stock went up 37%. In that case, I will move my blue line way above the yellow line. Okay. So my mental stop loss is way above the yellow line. I am not going to allow that stock to come down to my yellow line, which is my buy point, and then further come down to my red line, which is my 8% stop loss. So the mental stop loss gives me a kind of a level where I can choose to exit if it closes below that mental stop loss. Okay, so this gives me discipline. But anyways, it was a good base. If we look at the base, see, this is what I was looking at. It was a sound base, clean and simple base. See, if I measure the height of the base, 11.63, so not a big deal, not a huge correction. Then we will draw the base. Let's see how much price action you have in the. So as you can see here, there is not much price action in the upper half of the base. Okay, most of the candles, I would say the base started from here up, except this candle. All the other candles have closed below the red line, which is the midpoint of the base. Except this candle, all other candles have closed below the look. After this, every closing is below this red line, which is the midpoint of the base. That's a negative sign. That tells us that even if we get into the stock, we need to be cautious. Or even if we get into the stock, we should play it for a shorter move, not for a longer move. So if we pay attention to the base gives us a lot of valuable information. If this consolidation would have happened near the upper half, inside the upper half, or inside the upper quarter, then probably I would have held it for a longer period of time. It would have come out of the base. See, this stock never came out of the base. See, that point one, it was never breached. Okay. No candle closed above that point one. So the base itself became, the high of the base itself became resistance, and the stock collapsed from there. So these are things that will happen. We are professional traders. We have to book losses sometimes, and we book profit on other trades to compensate for loss on such trades. So this is that concept of reward to risk, and I hope you learned from this. And could I have avoided this loss? Could I have reduced this loss? Of course, I could have sold here, but I wanted to give it some time. I had some unrealized and realized gains. So in that case, it allows me to hold on to the stock or hang in there and see how the stock reacts. If the stock had bounced from this level, from here, after this, if the stock had gone up, probably it would have doubled from there. Who knows? So I gave the stock time. It did not work out. So I was out of the stock. Okay. So hope this helps you. Thank you so much.